Hello everyone, welcome back to our new podcast at the Trusted Propcast. We have one of the most experienced person who has ever visited our podcast. Well, his name is Lyth. So hey Lyth, how are you doing?
I'm good. Thank you very much. Thank you for having me here.
Thanks. So guys, before we begin this podcast, I would like to say you that in this podcast we are going to hide 10 different coupon codes, and if you can find all those 10 coupon codes, please make sure to mail us at support@thetrustedprop.com, and you can get a chance to win up to 100k challenge account. So well, let's begin. So hey Lith, how are you doing?
I'm good. Thank you. How are you?
I'm doing amazing. So well, before we begin, can you share a bit about your experience and about yourself?
My name is Layth Sanjuk. I'm currently the CEO and co-founder of iFunds.
Mm-hmm.
I've joined the forex industry in general in year 2000,
Mm-hmm.
and I've taken different roles throughout my career.
Yeah.
Yeah, and we're here today.
When I was doing a big research about you, and then I came to know that you were working as a dealer for a brokerage firm, followed by you were doing you were the CEO of a firm and so on. So can you please go us like walk us throughout your journey?
Yes, sure. I started as a dealer,
Mm-hmm.
and to be specific, a night shift dealer.
Yeah.
Okay.
Mm-hmm.
In 2000, when there was no trading platforms,
Mm-hmm.
we used to receive the prices via satellite.
Yeah.
And if it snows, you have to go upstairs, clean up the satellite to keep receiving the codes.
Mm-hmm.
Yeah. So I've learned the hard way. It
Yeah.
was fun. It wasn't easy,
Mm-hmm.
but I enjoyed it. 1 year later, I was introduced to the first automatic trading platform,
Digital
as
platform.
we know it right now. Yes, it was a MetaTrader though. It was a different platform,
Mm-hmm.
and yeah, I enjoyed it a lot. It made my life easier, and the traders as well.
Mm-hmm.
So I've seen that transition, and with that transition, a lot of things
Mm-hmm.
had changed. So yeah, then I was in charge. I was a chief dealer, then in charge of risk management. I
Yeah.
took some managerial roles.
Mm-hmm.
Including training, recruitment, opening up new offices for my company.
Mm-hmm.
Then I moved to Dubai in 2009 with another broker.
Mm-hmm.
And that was a major shift in my career because um, I was introduced to the A-book concept.
Yeah.
We were one of the first companies to actually implement A-book, 100% A-book concept. So we invested a lot in building the infrastructure
Mm-hmm.
to enable this model. And I'm very proud of that achievement. Later on, I took the role of Chief Operations Officer at
Mm-hmm.
another brokerage firm. Then I shifted to marketing. I grew passion for marketing. I enjoy it. I believe everyone, regardless of your role at the
Mm-hmm.
company, you should understand how the marketing works, your audience
Mm-hmm.
basically, because marketing is not a theory. It touches every aspect of your business,
Yeah.
your product offering, your messaging, how you communicate with your audience, how you identify your audience,
Mm-hmm.
how to identify their needs as well, and
Mm-hmm.
so on. Yeah, and finally, I'm here
Yeah.
with iFunds.
Mm-hmm. When the era moved from what I can say physical to digital, was there any change in market behavior or the way market behaves?
No, every era, but it doesn't have anything to do, in my opinion, with the shift to the online trading.
Mm-hmm.
But that era was different. Back
Mm-hmm.
then, we used to experience a lot of intervention from the Central Bank of Japan, for
Yeah.
example, the Bank of Japan,
Mm-hmm.
and that used to shake the market heavily.
Mm-hmm.
So, but we don't see these nowadays. So
Yeah.
every market has its own circumstances,
Mm-hmm.
depends on what's going on in the world.
And why do you think we saw quick shift? As you said that Bank of Japan was super active at that time. and now we see that Bank of Japan is kind of silent and does not has a very huge impact compared to other markets. So why do you think why we saw such a huge shift in that?
Well, back then, the Bank of Japan was always interested in keeping the Japanese yen value lower
Hmm.
versus the US dollars. And that's why they did intervention, which means they sold a lot of Japanese yen in the market and they bought US dollar instead to devalue
Hmm.
the Japanese yen.
Yeah.
It helps in exports
Hmm.
mainly.
Hmm.
So their approach to back then, or one of their objectives, was to increase the exports
Yeah.
in the contribution to the Japanese economy.
Mhm. You know, when I was reading a book, trading book, and in that I saw that previously you have to call your broker to say that okay, we have to buy one lot of euro at so and so price.
Yes,
So were you a part of that era also?
I was on the other side of the phone. I
So
was receiving the calls,
yeah.
and then because we don't have the execution
Mm.
venue, we were not an execution venue,
Mm.
so I had to call the dealer in London
Yeah.
to execute that order. So I used to hold two phones, and the client on one side and the dealer on one side.
Yeah.
The price keeps changing, and you have to quote the new updated price until
Mm.
the client confirms. I confirm back to the dealer. He gives me the final confirmation, the price and everything.
Mhm.
I put the phone down. I write it down.
Yeah.
Okay, so I already have a statement. Like if I just need to check the prices and I know how
Yeah.
much equity the client has.
Mhm.
And this makes you think, and you go deep into the mechanism
Yeah.
of how this the whole thing works.
Did the broker, you what I can say, at that time used to manipulate prices?
No way, man. No, no,
No. And what was the
no.
commissions and spreads that you had to pay at that time?
Spreads were high. When we offered 3 pip spread on Euro USD, it was like wow.
Right now, I think we have like
Yeah.
zero point 0.1 pip to
Yes.
0.5.
Yes. The
And
margins were high.
yeah.
The minimum deposit was very high.
Mm-hmm.
I think it sometimes $5,000, $10,000. It wasn't accessible to everyone.
Mm-hmm.
And
It was kind of luxury, you can say.
yes, and for people who know what they're doing,
Mm-hmm.
not necessarily all the time, but at least they know what kind of risk they're exposing
Mm-hmm.
themselves to, and so they make more informed decisions.
Mm-hmm.
Right now, with you can start with $5, $10,
Ah.
and that okay as a learning experience, good to
Mm-hmm.
be accessible,
Yeah.
but sometimes it turns into like a gambling kind of experience, which
Mm-hmm.
we don't want. That it shouldn't be that way.
Yeah.
You should spend the time to learn and understand, build your own strategy, build your own discipline,
Yeah.
which is very important.
Mm-hmm. And how do you used to keep the record of prices? Because right now we have technical analysis, which we can map on the charts. So how you guys used to do that?
We didn't do much, okay,
Mm-hmm.
but I'm sure within the banks and treasury, they had their own systems to record prices, of course, but it wasn't available for the retail market.
Mm-hmm. And how long have you been working as a dealer?
But I worked as a dealer 4 years maximum.
Mm-hmm.
I was chief dealer eventually,
Mm-hmm.
and then I saw. Meanwhile, I've learned technical analysis,
Mm-hmm.
so I could help managing the risk of the
Mm-hmm.
company. So I was assigned to that role.
Does this role of dealers, do we still have this role within the broker space?
Do we still have?
This particular job role in the broker space?
Yes, yes.
So what is this role now about? Because previously it was about, I think, managing prices and getting the orders, right?
The dealer.
Yeah.
Okay, yes. The dealer was, yeah, mainly taking the orders, making
Mm-hmm.
sure it's executed, basically that.
Mm-hmm.
I don't remember anything like much more. But nowadays, it's more about monitoring.
Mm-hmm.
Okay, you don't get involved in the execution side of
Mm-hmm.
things. Everything is almost automated. But it is important to keep an eye on the exposure, the trades, any kind of anomalies in the order book. Yeah, whether it's B book or A book,
Mm-hmm.
you need to keep an eye.
Mm-hmm.
Some brokers might assign some actions to dealers, so
Mm-hmm.
they take action in some cases. It
Mm-hmm.
depends on the broker internal
Yeah.
policies.
And do you had to have slippage at that time? What was the slippage at?
No, well, when it was on the phone,
Mm-hmm.
no slippage. It was actually negotiable. You know, you could ask negotiate the price with the dealer on the other
Oh.
phone. You know, yeah, like 1 pip or 2 pips better to the trader's favor. They used to negotiate.
Mm-hmm.
So, but on with but with online trading platforms, there was no slip. If it's slippage, then it means the market actually moved
Mm-hmm.
after you submitted the request.
Yeah.
And this has to do with latency, uh, yeah, and connectivity and those kind of things. But it was not, I don't think there was any kind of systematic slippage
Mm-hmm.
per se.
So and when you were a dealer, so do you have any experience or what I can say, any story to share with our audience where anyone actually lost a lots of money?
Yeah, a lot, fortunately.
How much do you think people used to lose then on an average?
Used to lose.
Yeah.
Well, tens of thousands. Uh, yeah, some clients lost millions back then and made millions.
Mm-hmm.
But, you know, it all comes down to fear versus greed, how much you're willing to take, move to go away with. So, yeah, we've seen it all.
And what was your next role after you ended your position as a dealer?
Risk manager,
Hmm.
which is managing the internal risk of the broker.
Hmm.
Back then, there was no such a thing as STP or A book.
Hmm.
Okay, it wasn't,
So basically,
uh,
everything was be booked.
was B booked and then passed manually to a third party, which is
Hmm.
a liquidity provider or a different broker. So you need to maintain that the company's
Hmm.
capital adequacy.
Hmm.
Okay, for example, you don't want to be exposed. You want to make sure that the value at risk is
Yeah.
within the range that the company can afford.
Hmm.
Because when someone is profiting and they ask for their withdrawal, it has to be there and it has to be paid.
Hmm.
Okay, so yes, and we came up with a simple strategy.
Hmm.
Okay, we know how much we can afford
Yeah.
to take as risk
Hmm.
in terms of dollars.
Hmm.
Okay, and that's all we risk, and we split it into multiple like percentage wise
Hmm.
per day, per week, throughout the month.
Hmm.
If we make some extra profit, we don't risk it all again.
Yeah.
We slightly do the risk. So the broker should know better.
Hmm.
Okay, it's okay to take some risk. This is how the market works.
Hmm.
But you don't want to be the other trader on the other side.
Yeah.
You know, you have to know better. You have
Hmm.
the visibility to see the whole order book, and I believe the broker always has the opportunity to be one step ahead of the traders,
Hmm.
which is in favor of both the broker and the trader.
Hmm.
Traders now sometimes believe that the broker is always working against them. It's not true.
Yeah.
Okay, it's really
Hmm.
they don't have to, like, they're not monitoring your trade and trying to make you lose. The market moves, you lose.
Hmm.
Uh, if you stop it, you stop your loss.
Yeah.
They need to manage their risk within those parameters.
Hmm. And we all know that traders lose a lot more money. Okay, before this, how do you guys used to know about the upcoming news and high impact news and all? And do you guys
Well,
actually lose money during this news session as a broker?
yeah, we had on TV. We used to have the releases, and then Forex Factory
Hmm.
helped a lot.
At that time also.
Yeah, yeah,
How old is forex fact? Like,
it's
was
very
it
old.
it's
I don't know.
was it there in 2000?
Not 2000, no. In 2000, we used to hear about it from the TV,
Hmm.
probably. Yeah, there was one specific TV channel
Hmm.
that you can see prices, you can see news, and so
Hmm.
on. So yeah, that was our only source
Hmm.
as a retail broker.
Yeah. And how many brokers used to exist then? Because right now we know there are thousands of 40,000 brokers
Not
approximately.
many retail brokers. There were not many. But yeah, as soon as the online trading platforms emerged, a lot of brokers
Mhm.
stepped in and joined.
Do you think it's easy now to open a brokerage firm compared to then 2000, 2002?
Which one is easier, back
Do
then
you
or now?
think, yeah, do you think it's easier now to open a brokerage firm?
Yes and no. But to get it up and running, yes,
Hmm.
it's easier.
Hmm.
But to manage it, I think it's more complex than it used to be.
Why do you think so? Because we got so many things automated right now.
Clients' expectations changed. The competitions changed a lot of the rules. As I told you back then, you, you know that the stop out was exactly at 100% margin level, which means that at 100% your equity is equal to your margin
Yeah,
requirement.
man.
You haven't lost your money,
Mm-hmm.
okay, but it is equal to your margin requirement and you get
Had to
stopped
achieve that.
out. Okay, it was good for the favor of the
Brokers.
trader.
That is.
Yeah, the trader, they don't lose their initial capital. Yes, they then they started demanding,
Mm-hmm.
okay, no, let me lose more, and until it reached zero.
Yeah.
Now you can lose all your capital.
Mm.
The leverage wasn't as high as
How much
nowadays.
leverage do you usually? How much leverage do you usually used to give to the traders?
Maximum 1 to 100.
Right now we have one is one limited,
Yeah, yeah.
and we all know that traders they lose a lot of money during high impact news or even let's say medium impact news. So is it something very similar that even brokers lose money during high impact news or they make money during high impact news?
It depends. It goes either way. It depends on how they manage the risk during news. Sometimes they pass it to a third party.
Mm-hmm.
Sometimes they pass it on to the trader. So
Mm-hmm.
they restrict them during news. They widen the spread. Uh, Sometimes it's naturally widened,
Mm-hmm.
okay, due to because even banks they are inclined to reject orders during release like news releases due to uncertainty.
Mm-hmm.
Okay, so even large banks would reduce the amount that is offered on both sides, bid and ask, and that would increase the spread. Okay, but some brokers, they, for example, don't allow you to place orders 30 minutes before news or have pending orders placed during the news release
Mm-hmm.
and so on.
Yeah. And by the nowadays most of the prop firms, when I'm saying about most, 80 to 90% of the prop firms they don't have their internal risk team. They just claim they have this team, but they don't. They just rely on B book. So even I have worked with a broker. Many of my audience knows. So even I know how important is a risk team for any financial institution,
Yeah,
because you are exposed to the market. You can't just let's say hold $30 in your account. So do you think that prop firms do actually need risk team, or what's your thought on that?
of course. And if we're talking about the regular type of prop firms that we know in
Mhm.
the market, like evaluation phases, they need to manage different layers of risk. It's not only the market risk. but
Mm,
also the operational risk.
mm,
It is very important. And that's why I believe in most cases,
mhm,
the current business model is not sustainable.
mhm.
And that's why we see a lot of prop firms failing or denying payouts.
Yeah.
Yeah, they need like a major risk management approach, or even change of the risk model itself.
Mhm. And what are some of the risks that you think prop firms are exposed to, but they are not accepting?
Okay. When you're offering a $100,000 funded account
Mm-hmm.
for the price of $500,
Mm-hmm. It's
okay,
not even the drawdown.
yeah, the drawdown is 10%, let's say, which
Mm.
is $10,000,
Dollars.
and their obligation is 80%, let's say,
Mhm.
of
Profits.
profit, so $8,000. All right,
Mm-hmm.
that's the absolute capital value,
Mm-hmm.
and you're offering it for $500 if with conditions.
Mm-hmm.
Now, if someone manages, sorry, if someone managed to pass that evaluation phase,
Mm-hmm.
okay, and they got funded, you're obliged to provide that capital.
Mm-hmm.
In return, you have only like one out of 20, let's say, or one out of 16 uh, from the capital you have to place if you're planning to pass the risk to a liquidity provider like a
Mm-hmm.
book model.
Mm-hmm.
Okay, so you have two choices: either take the risk of a $10,000
Yeah.
when you have 500 in your pocket,
Mm-hmm.
okay, which is
Yes, yes.
unbelievable, okay, uh, or pass it and bear the cost of
Mm-hmm.
like $7,500,
Mm-hmm.
okay, and then just to make sure that any profit is available for payout.
Yeah.
Bec- or you are always concerned that the
Mm-hmm.
pass rate should not exceed that amount, because for every trader who passes you will need at least 16 who fail, okay,
Mm-hmm.
because you rely heavily on the revenue you make from the purchase
Mm-hmm.
amount,
Yeah.
or price that you put on your website. And that's where the problem comes. More people passing,
Mm-hmm.
more trouble.
Yeah.
Okay. And if you add on top of that the operations cost,
Mm-hmm.
the marketing cost, everything else,
Mm-hmm.
you would need even more people to fail.
Yeah.
And this creates a very dangerous
Model.
situation,
Mm-hmm.
which is pure conflict of interest. You're
Yeah.
in like clear
Mm-hmm.
conflict of interest with your own clients. How
Mm-hmm.
can you manage?
I agree. And is it something that even brokers also face? If it specifically talk about B-book brokers, or they
And
have
yeah,
less exposure compared to what prop firms have?
they have much less, because at least you're paying the full amount
Mm-hmm.
in advance. So it's their choice to pass it fully, to pass it partially, or just leave it.
Mm-hmm.
If a broker is well capitalized and
Mm-hmm.
they know how to manage their risk, they know their value at risk, and constantly monitoring and optimizing, they
Mm-hmm.
can be fine on bbook without having to make it worse for the trader, you
Mm-hmm.
know.
And do you think like being a broker is also profitable? Being a B-book or A-book broker is profitable.
It's not easy, really.
Why do you think so?
Because to operate a fully fledged broker,
Mm-hmm.
uh, you need a lot of components.
Mm-hmm.
Okay, first of all, the human component.
Mm-hmm.
You need different teams to take care of different things.
Agree.
Then technology,
Mm-hmm.
infrastructure, ancillary services, regulation, legal services, marketing. You cannot survive if you don't put uh, the investment into marketing, like the right investment in the right way, and it doesn't pay off immediately. It takes time.
And other than this, how long have you been working as a risk manager? as a risk manager?
maybe 2 years.
And what was your next role after you exited as a risk manager from a previous company?
Yes, I moved to a new company, and the
Mm-hmm.
reason I moved is that they were really keen to um, create the A book model.
Mm-hmm.
Okay, I was very interested in the idea, which is passing all trades to a liquidity provider
Mm-hmm.
and making commission or some portion of the spread.
Mm-hmm.
Basically, it's like theoretically, it's a zero risk for the broker. At
Yeah.
least they eliminate the market
Mm-hmm.
risk or most of it. So I was very interested in that model because there's no conflict of interest.
Mm-hmm.
You can do more for your clients
Yeah.
in that case. You can focus on the enhancement of the user experience, marketing, and so on.
Mm-hmm.
Yeah, and we did it from scratch.
Mm-hmm.
We had to build because we're talking about completely two different technologies.
Mm-hmm.
Okay, we have the retail trading platform technology, which
Pre-booking.
yeah, which is not compatible with the institutional
Mm-hmm.
technology. Institutional technology, they use a specific protocol, financial information protocol, fix protocol, financial information exchange protocol. But on the other hand, on the retail side, they use completely different technology. So you need to make these two systems talk to each other back
Yeah.
and forth.
Mm-hmm.
Okay, sending trades,
To the.
receiving back
Mm-hmm.
confirmations, and executing on the client side, and it
Mm-hmm.
has to be fast.
Mm-hmm.
Okay, so we started experimenting. We had our own development team, and we managed to do it. It costed us a lot, okay, because there was no demo environment to test. So we were testing with real money.
Mm-hmm.
I remember we lost around 42,000 just testing,
Mm-hmm.
okay, and placing trades here and there, and making
So we
sure
don't
that
used to have demo accounts then
for this specific purpose, no, there was no
because
way.
you were making trades live. You were sending them live.
Yes, we're sending them to a bank or a prime broker
Mm-hmm.
in that case. And the prime broker didn't offer any
Demo.
test environment. It,
Yeah.
it was live.
Mm-hmm.
So we had to take small trades and just make sure of, but they accumulated, and the total cost was more than 40,000.
Mm-hmm.
But we did it.
Yeah.
It worked. And that was amazing.
Mm-hmm.
We started offering low spreads,
Mm-hmm.
very low spreads.
Mm-hmm.
Okay, because when you aggregate multiple prime brokers,
Yeah.
you get the best of each side. You
Mm-hmm.
get the best bid versus the bid ask, so you don't have to come from the different source.
Yeah.
And that's how sometimes you see 0.2, 0.3 on majors.
Mm-hmm. And when I was going through your portfolio, then I saw that you were working as chief officer for a brokerage firm. I won't be naming that firm, but what was the responsibility? And when you were appointed as a CEO, so what were some of your major tasks, or you can say some of the things that you had to tackle through?
Well, a lot of things. As a chief operations officer, you're basically in charge of the entire operations.
Mm-hmm.
I excluded the finances like accounting and financial management, but that included the back office, technology, infrastructure,
Mm-hmm.
the bridging between MetaTrader and liquidity providers, the risk management side of things, marketing, sales,
Mm-hmm.
yeah,
And
customer support for sure.
mhm. And then you moved forward for the marketing, right?
Yes, yes.
What made that shift of completely changing what I can say your role?
I always, one of the reasons, because I'll tell you a story.
Mm-hmm.
I told you I was a night shift dealer,
Yeah.
okay? And it was the second time I was also a night shift dealer, and
Mm-hmm.
I was trying to move to the day shift. I told the director back then who interviewed me that I already have experience. You know that
Mm-hmm.
You know what he said? Like,
Mm-hmm.
get yourself out of the night shift,
Mm-hmm.
and even if you take my position, I'll be happy. So I thought, okay. So I took it as a challenge.
Mm-hmm.
During the night, there is nothing much going on.
Yeah,
Okay,
the
we're talking
markets are
about
silent.
GMT
Yeah.
+3 time zone.
Mm-hmm.
So I started learning technical analysis.
Mm-hmm.
Okay, and when I felt confident
Mm-hmm.
enough with my knowledge, I started preparing reports, like
Mm-hmm.
market outlook reports,
Yeah.
and send it out to traders, leave it at the desk. We used to have walk-in
Mm-hmm.
clients back then.
Mm-hmm.
Leave it in the lobby for traders. And I remember I took like a 1 week off, and the clients went crazy. Like, where are the daily reports?
Mm-hmm.
They got so hooked. They liked them. They
Mm-hmm.
felt that it was helping,
Yeah.
and that was my ticket out of the
In.
night shift.
Yeah.
Yeah, and I was promoted and moved on. So, and this brings me to the importance of content. It
Mm-hmm.
was content,
Agree.
what I did,
Mm-hmm.
but valuable content,
People love valuable content.
of course,
Mm.
and that's what you do. I salute you for that.
Thanks. Thank you so much. And then again, how long have you been working as a marketing officer?
Yeah, marketing. I loved content. I believe that we could do more,
Mm-hmm.
adding value. So our marketing strategy was mainly based on content.
Mm-hmm.
We started, like, at some point we used to produce like 10 pieces of content, including analysis, articles, webinars, and so on,
Mm-hmm.
mostly educational or informative.
People
And
love that.
yes, yes, and it adds value.
Mm-hmm.
Okay, we used to work with different market analysts, different approaches to
Mm-hmm.
market analysis, and so on.
Yeah.
So they saw the value, and I was passionate about it because I believe that it works. It's a win-win kind of marketing. It's not like buy now, open a demo account now,
Mm-hmm.
or something that helps.
Mm-hmm.
Yeah.
Okay.
Uh,
And other than this, how did the idea of starting your own prop firm came into your mind? And were you knowing about these prop firms before?
yes, I knew about them.
Which one?
I knew about many of them. I
Mm-hmm.
am in the industry, so I'm
Yeah.
aware of the concept.
Mm-hmm.
But I know that it's not perfect.
Mm-hmm.
It was flaw.
You
Sorry.
know, with this, I would like to ask one thing. So, when I came into the industry, so for me, prop firm was like the current model, that is FTMO model or my forex funds model. But then I came to know there is like prop firms. It's what I can say. It's a completely separate universe. Um, so another term that I believe for the prop firms that we currently call it as prop firms is not the correct term, because prop firm itself means like providing actual funds to the traders. So what's your thought on this?
Exactly. By definition, proprietary
Trading.
trading is different
Mm-hmm.
from what is being done. Okay, let's say it was customized for retail.
Mm-hmm.
Okay, but it doesn't serve the same
Purpose.
purpose exactly.
Mm-hmm.
Okay, that's my opinion about it. I
But
cannot comment more.
yeah, but how does like let's keep demo proprietary trading aside, but how does the actual prop firms work? How do they work? The actual ones.
The actual ones, they put their own capital at risk.
Mm-hmm.
They hire traders, okay, and they start trading. They allocate capital for them. They
Mm-hmm.
traders start trading with some constraints,
Yeah.
which is mainly, I believe, is like any portfolio manager. When you are a portfolio manager, you
Mm-hmm.
sign like an agreement which concludes the risk appetite of your investor.
Mm-hmm.
Okay, there has to be a risk profile for every investor, and they have to explicitly define their risk appetite, how much risk they're willing to take, and what kind of strategy they're willing to risk their investment with.
Mm-hmm.
So, and this is it's a very simple right for every investor
Yeah.
to have. In a similar way, prop firms they do this. They have this mandate for every trader.
Mm.
I'm not sure if it includes maximum drawdown, but I assume it does
Yeah.
because that's the maximum risk
I
we're
think maybe
willing to
margin
take.
rule and all.
Pardon?
I think maybe they will be having strict margin rules and everything,
Yes, yes.
and also what's the profit split that we used to that we see at the actual real prop firms, the profit split or commissions, how does it works for the
I
traders?
think it's not exactly like what we have here, but they share profit with their traders. But I
Mhm.
believe the firm keeps most of it,
Mhm.
not the other way around.
Yeah, and how did you came up with the name of iFunds?
I didn't, to be honest. My partner did, Ahmed.
Mm-hmm.
I liked it, so yeah, we went for it.
Mm-hmm.
I joined iFunds slightly later after it started. I love the concept because it was built on eliminating any conflict of interest between us and our own clients.
Mm-hmm.
That's the main concern that we had from the beginning, and we've seen the other business model is not sustainable. Even statistically, it's very difficult to maintain. So we came up with this concept. Mainly, my partner had the first initial draft of how it should be done,
Mm-hmm.
and then we enhanced it to make it more attractive. For example, right now you can select your own maximum drawdown and profit split.
Customizable.
Yes, it's customizable. The lower you're willing to risk, the higher your reward will be, and it makes sense.
Mm-hmm.
Okay, some clients they know that yeah, my strategy doesn't have much drawdown, so I'm willing to lower my drawdown from 10% to 8%, but that would increase my profit split by 10%.
Mm-hmm. And other than this, do you guys have your own in-house tech?
Yes, yes.
Mm-hmm. How did
Uh,
you manage to create it? Because we see 95% of prop firms, they just come out, they outsource their tech.
yeah,
And do you think it's sustainable? Because recently we have saw a fall of few prop firms. It was because of mostly due to tech providers disconnecting them suddenly.
yes,
So what's your thought on this? And also one more question I would like to add is that within prop firm industry we see that tech providers, they kind of control everything, and if they want they can suddenly switch off the tech, and all the clients they just get lost, or the clients face lots of problems. So is it something that we even see on the brokerage side?
mm, like unlikely, very unlikely, because uh, every financial institution, if they want to outsource any part of the business,
Mm-hmm.
that's completely fine. But
Mm-hmm.
you need to know who you're dealing with. Okay, you need to know your rights. How much control do you have over a specific system?
Yeah.
And what is the fail over
Mm-hmm.
option that
Mm-hmm.
you have? You cannot rely. That's why you don't have, you don't see these problems with providers like MetaCodes, for example. It's
Yeah.
a well-established company,
Mm-hmm.
and like actually, it is they choose their own clients. You
Yeah.
know,
Mm.
it's not like yeah, they're
Anyone
not
can get.
after
Mm.
clients because they know what they're offering, and they don't want to enable
Mm-hmm.
scammers, which is the right way to do business.
Mm-hmm.
So we had the technology for the regular prop trading, but
Mm-hmm.
we were like completely against offering it to anyone
Mm-hmm.
because we the same, we didn't want to be enabler for bad
Scammers.
actors.
Mm-hmm.
Yes. And until now we didn't use it, and we're not planning to. We completely shifted the way it
Mm-hmm.
works to our current business model, which is 100% ebook.
Mm-hmm.
You still can make profit as a company
Yeah.
without making things difficult for your clients.
Mm-hmm. So I had this very unique question in my mind, and I think it's a very unique approach that you are doing, and I think you are the only firm that is doing it. So why you guys don't have daily drawdown?
Simply because we don't need it.
Mm-hmm.
It doesn't add any value to the to us as a company or to
Mm-hmm.
the trader. It
Mm-hmm.
just makes things difficult for them.
Mm-hmm.
It's not the only thing that we don't have. We don't have consistency rules. We don't have the weekend holding restriction or news trading restriction or
Mm-hmm.
EA restriction. We eliminated all these
Mm-hmm.
because simply we don't have any interest in having them.
Mm-hmm.
Okay, we want to. It's the opposite actually. We
Mm-hmm.
want our traders to stay in the market
Mm-hmm.
and as profitable as possible
Yeah.
as long as they could,
Mm-hmm.
because that's how we built our revenue model.
Mm-hmm. And with this, what makes a prop firm unique compared to other firms that are out there?
Makes iFunds unique.
Yes.
Uh, I believe the model itself is unique.
Mm-hmm.
I haven't seen any competitor who is doing the same.
Mm-hmm.
Uh, but yeah, we try to differentiate ourselves. For example, since we are running an A-book model,
Yeah.
we don't mind traders copying each other.
Mm-hmm.
Okay, and actually we have our own leaderboard.
Mm-hmm.
I'm not sure if you've seen it, but we have a list of top traders.
Yeah.
Soon you will be able as a trader to copy those.
Mm-hmm.
Okay, so we trying to make it easy
Mm-hmm.
for traders regardless of their current level of experience
Mm-hmm.
to enter the market and trade without causing much damage. So we give them access to the capital and to the tools that will help them sustain in such
Mm-hmm.
market.
Do you guys also allow news trading or holding the trade during the
Yes,
news?
yes, we don't mind.
Mm-hmm. And you know, nowadays we see a trend that 9 out of 10 platforms, they say that we are running a maintenance during the weekends, and they will ask you to close all your trades. And when I personally used to trade with brokers, and because I'm a swing trader, so I used to hold my trade for, let's say, weeks and sometimes even months. So I never saw the same thing happening with brokers where they will just mail me and say, okay, you have to close your trade because we are doing a maintenance. So do you think this is something that prop firms are doing, just kind of manipulation, or playing with the system to ensure that not everyone reaches the payout?
I don't know their intentions, to be
Mm-hmm.
honest, but the only reason logically that I could think of is that they want to avoid market gaps at the opening
Mm-hmm.
of on Monday or Sunday night.
Mm-hmm.
Um, but I believe every client has the right to be informed
Mm-hmm.
about such changes. You cannot just go unless there is like a complete necessity,
Yeah.
but you cannot just go and change the conditions at the end of the week and close positions without informing your clients in advance.
Yeah. And what was the biggest payout that you guys have offered so far?
At like one payout,
Single payout.
one single payout. If I'm not mistaken, I think it was 12,000 something.
Mm-hmm.
Yeah.
And other than that, like,
Sorry, but
yes, yes.
it the reason is that we don't have waiting period
Mm-hmm.
between payouts.
Okay.
You can request a payout from day one,
Mm-hmm.
and then you can request it anytime later on.
Okay.
So what we noticed is many traders they tend to withdraw as soon as they make some profit. They request the withdrawal and the
Mhm.
same day, and they receive it, and then the
So
same
there is
same.
no minimum payout days or minimum trading
No,
days.
no, and that's why we don't accumulate huge amounts of profits
Mm-hmm.
for payouts. Yeah, but the highest one I remember was 12,300, something like
And
that.
that, even if you like, I haven't seen any complaints about iPhones, to be honest, so far, because I don't know, but I haven't seen any complaints with that for iPhones so far.
Yeah, uh, we're grateful for our traders.
Mm-hmm.
We really try hard to make it worthwhile
Mm-hmm.
throughout their entire journey with us,
And
and we put a huge focus on customer support.
mm-hmm. How big is your team right now?
Pardon?
How big is your team right now?
The team is, I think we're around 35 at the moment. We're
Mm-hmm.
not big. You don't need a huge team to
Mm-hmm.
run it. We automate most of our operations. Uh,
And there are prop firms which operates with just 2 people or 3 people max.
yeah,
There are many prop firms.
okay,
They are just what I can say, marketers, nothing else.
okay.
Yeah.
Well, you need more than that, in my opinion.
Hmm.
Yeah, if they use AI for customer support, which I don't
Believe in.
agree with,
Hmm.
no. You need the human touch,
Agreed.
and you need to give personalized service to your client.
Hmm. And you know, when you came like when you started your own prop firm from the brokerage industry, what was the huge difference that you saw within between both the industries, like brokerage and prop firm industry?
It's a lot different. I think even
Mm-hmm.
traders approach to the market is different from live traders with brokers. I think what I noticed is the characteristics of a prop trader
Yeah.
is different from that of a forex trader, regular forex trader.
Hmm.
Uh, yeah, but in general,
Mm-hmm.
I've seen more profitable traders in iFunds than I've seen with other brokers. I believe they they are serious about it.
Mm-hmm.
They they take the opportunity as they go through the challenge. Sometimes we don't have evaluation challenges. We offer instant funding,
Mm-hmm.
but they are willing to go the extra mile
Mm-hmm.
to get access to that capital.
Agree.
And then once they're funded,
Mm-hmm.
they want to keep it. And that's good. Okay, it's good to be careful,
Yeah.
manage your risk properly.
Mm-hmm.
And on the other hand, well, I don't want to generalize, but many traders they make a deposit with a broker with $100 and they gamble
Mm-hmm.
it
Yeah.
away, and then they repeat the process and so
Hmm.
on.
What are some of the things that you have learned as a fintech or as a founder?
People are the most important asset of any organization.
Hmm.
That's I believe always valid.
Yeah.
Technology
Mm-hmm.
is another asset.
Mm-hmm.
It's good to have your own technology. It's not easy,
Mm-hmm.
and sometimes you need to let go.
Mm-hmm.
You don't have to build everything from scratch, but if it's unique to you, then
Yeah.
it's worth building.
Mm-hmm.
It's always good to experiment.
Mm-hmm.
You don't necessarily get it right from the first time, but
Yeah.
every mistake leads you to the right answer or the right product at
Mm-hmm.
the end.
And one more thing, like iFunds is like maybe second or third firm that offers daily payouts, and we usually see daily payouts on the futures industry and not within the forex industry. So, what makes it possible?
Because the profit is available. We pass all trades to
Mm-hmm.
regulated liquidity providers,
Mm-hmm.
and they are available for us on demand. So we make them available for our clients on demand as well.
Mm-hmm.
We don't have any reason to withhold profits
Mm-hmm.
from clients.
Perfect. And other than this, have you ever like encountered cheaters on your platform?
Well, the only type of cheating that we consider as cheating, and it's an
Mm-hmm.
industry-wide definition, by the way, it's called front running in the stock exchange.
And what do you mean by that?
Forex trading translates to latency arbitrage.
Okay.
Okay, latency arbitrage is some kind. It's a manipulative technique.
Mm-hmm.
Okay, it takes advantage of delayed prices on the broker side.
Mm-hmm.
But when it comes to real execution with liquidity providers,
Mm-hmm.
the the price gets slipped
Mm-hmm.
to on the expense of the
Broker.
broker,
Mm-hmm.
and this is kind of cheating. Okay, we
And
pass the same prices that we take to you, but if you take advantage of a slow price
mm-hmm.
and we end up taking
Higher
the
price.
yes,
Mm.
let's repeat it. I'll explain it in an easier
Mm,
way.
yeah.
Okay. The only strategies that we don't allow, and I don't even call it a strategy, it's just a technique that takes advantage of delayed
Latency.
prices,
Mm-hmm.
of latency latency, which is the latency arbitrage.
Mm-hmm.
And by definition, it's some form of front running, which is anyway illegal even in stock exchanges.
Mm-hmm.
So that's the only type. We don't disqualify accounts immediately, but
Mm-hmm.
we try to warn the trader first time, second time if they don't change the behavior or trade differently,
Mm-hmm.
we just disqualify them. We
Mm-hmm.
have to. I mean, because if we pass this kind of trades to
Yeah.
a liquidity provider, they
Mm-hmm.
flag it as toxic
Mm-hmm.
flow,
Yeah.
and then the whole trading conditions for everyone will
Mm-hmm.
not be the same. They
Mm-hmm.
they might resort to widening the spread
Yeah.
or making it difficult, like they don't give you the best
Prices.
quality of execution or
Mm-hmm.
prices, and we don't want that. I mean, because of like a few bad players, we don't want to jeopardize the whole ecosystem for other traders.
Perfect. Okay, so guys, now we will quickly wrap up this podcast. And again, if this video gets like more than 500 likes, we are going to bring Layth again on our podcast.
That's with a
And
pleasure.
the next time we are going to ask him more controversial questions. So if you love controversies, please make sure to like this video. You know. So thank you so much, Layth, for joining for this podcast. And before we end up, is there anything you would like to share with our traders?
Trade responsibly. Okay, there is always opportunities in the market. If you miss one, don't go crazy trying to make it up. Don't take it personally.
Mm.
Uh, Trade wisely.
Mm-hmm.
Measure your steps. You're not gonna be rich in 1 or 2 days.
Mm-hmm.
Simplify. Don't overanalyze the market.
Yeah.
Simplify your approach to the market so you don't make it harder for yourself.
Mm-hmm.
Always take proper risk management, uh, stop loss, and position sizing. Leverage can
Mm-hmm.
be a killer.
Mm-hmm.
Okay, it's a two-edged sword. Don't oversize your positions, because you, if you look at the market,
Mm-hmm.
anywhere anyone bought or sold, they had the opportunity to end up in profit at some point
Agree.
if they stayed in the market.
Mm-hmm.
Okay, so just make sure that you stay in the
Mm-hmm.
market, don't risk too much.
So, well, thank you so much for joining Lyth for this podcast.
My pleasure.
Thank you so much. And guys, before we end this podcast, again, I would like to remind you that we have 10 coupon codes hidden in this podcast. And if you can find them all, then mail us at support@redthetreasureprop.com and you can get a chance to win up to 100k challenge account. So, well, thank you so much for watching. See you soon.